Okay, guys, there we are. We're back. It's Wednesday morning. We're here for the weekly podcast, weekly live miner update. And this week, Anthony, we have got a ton to talk about. We've got new updates out from both Bitfarms and Riot in relation to yesterday's M&A news. So we're going to be talking about that. You've brought along some charts and tables to really help understand the valuation, the metrics there. We want to talk about IREN. We've got some information from Bit Digital. And Core Scientific. So we've got a lot to go through in terms of the presentation portion here. We're going to try and get through that in about 30 minutes, you guys. Feel free to type your questions in, send those in the chat right away, and then we'll open it up. I'm sure there's going to be a lot of questions about our upcoming interview with Ben. We've got Daniel Roberts on from IREN as well. So two of the top companies in the space right now. And we can get into really any questions about any of the miners we cover. So Anthony, a lot going on this week. It's great to see you, buddy. Anthony just went out and purchased a green screen. So we're trying to get that set up today, but it looks like we may need a second one for you there. Hey, Anthony?
Yeah, I've got this is like 2 meters by 2 meters and it still looks small, but I'll try and tweak around with it this week and get it ready for next week. Yeah.
That sounds great, buddy. Right before we turned on the camera, the green screen actually fell over on Anthony. So that would have been a good one to check out there, you guys. I'm seeing the chats coming in. This is great. Glad to see we've got 40 people in here already, Anthony. So we'll jump right into the presentation, you guys. Before we get into the QA, just a couple quick housekeeping items here. First and foremost, we just launched our new HTML website, so powermininganalysis.com. I would encourage you guys to go in, take a look at that. It's got a lot of the stats that we talk about in our videos actually published on the website for each one of the miners. It also has links to all of our content and some additional metrics and tables from previous periods. So if you want to actually go back and look at last year, any of the growth trajectory of these companies, you're able to do so. The other nice thing we've integrated on this new website, Anthony, we've actually put the podcast platform embedded on the website. So of course you can listen to all our shows on Amazon, on Spotify, on Apple, but you can actually listen through the platform itself now, which is great as well. Now moving along, you guys, into the meat and potatoes of today's summary. So Anthony, I wanted to kick it off here just by showing everyone a quick update in terms of kind of how the market's looking mid-morning here. To my surprise, most of the miners are down right now, with Core Scientific and SATO Technologies being the only two to kind of buck that trend. I was expecting an update today, Anthony. We saw a lot of price action, a lot of green shoots yesterday morning, and then about halfway through the day, it seems everything kind of fell off a cliff, eh?
Yeah, that's the volatile nature of the mining stocks. Bitcoin moves a little bit, and the mining stocks move even more during the day. It's so hard to predict. You can have really good days of Bitcoin rallying, and the mining stocks don't pick up, and all of a sudden the price drops and the mining stocks rally. So we are seeing that sort of decoupling in terms of some of the correlation. But I think if you look over the last month or so, we've had some good. A few of the miners have done really well. Some of the miners not so well, but we'll probably cover a little bit more of that lately. But highlighting there, if you look at the bottom two there, in terms of green stocks, Core Scientific have been doing really well of late, massively up in the last 30 days, and getting closer and closer to that first warrant trigger, which will trigger at about, I think it's $5.83. So there's a first set of warrants trigger then. That brings in about $260 million in terms of cash, which will pay down some of that debt. So the debt's just over 600 million. And then when the shares get to the next target of 681, the company effectively then becomes debt-free, because the cash coming in for that will pay off the remaining amount of debt, plus give them a cash runway, which in their plan, when this was produced, back in May, this was, produced an extra $322 million of cash runway. So we're literally at the moment, we're about just literally about $1.80 away from that second warrant trigger, and the company becomes debt free. Now, bear in mind, the company have given 3 years for that to occur, and the likelihood is it will occur within that 3 year period. But we've articulated about Core Scientific for the last 6 months, about coming out of Chapter 11, about learning from the mistakes that were made prior to going to Chapter 11. They've dumbed down on the costs. They're spending far less now, and it showed in the last quarterly figure there. They were able to pay down some of the debt with the fact that they'd spent less, and also with the Bitcoin price higher than probably predicted for that quarter. So they're doing things really well. They've got a great team there led by Adam Sullivan, and it looks like going from strength to strength. If you look at the valuation of the company and compare it to the peer group of that top tier, even when you take the debt into consideration, it does look extremely undervalued compared to Core Scientific, compared to Marathon Digital, and compared to Riot Platforms. It's got over 20 exahash of self-mining hash rate, and delivers a good amount of Bitcoin every month. Doesn't have any poor months in terms of operation calls. It's not the best performing miner, and it's certainly not the worst performing miner, but every month it delivers an amount. And bear in mind, the 3 years prior to this, it was a top producing miner in all those 3 years. And in quarter 1, it was a top producing miner. So it doesn't have the highest hash rate, but it has produced the most Bitcoin for a considerable amount of time now. So I think people are sort of like waking up to Core Scientific, and we'll see how it goes from here.
Yeah, we sure will. One person who's not waking up to Core Scientific, I just want to do a special shout out to Gary. I think, Gary, you're probably our top commenter on all of our videos. We appreciate your dedication to Core Scientific. Gary's been saying they're totally undervalued since I started YouTube, and it definitely seems that he's onto something here. And interestingly enough, Anthony, yeah, 63% return on Core Scientific in the last month. And really nobody talked about it at all. It's just quietly creeping up. Now, the other one that has quietly been well, maybe not so quietly, is IREN. So, Anthony, I believe you've got a hat over there or something, eh? Look at that, buddy. Looking sharp. So IREN, obviously not as quiet as Core Scientific. This one's making a lot of waves, you guys. They just came off earnings. They announced the big ATM. They announced the 30 exahash target or growth goal. Market really woke up to that in a big way. You can see IREN up 60, just north of 60% in the last month. Anthony, it sounds like we're going to be having Daniel on next week. We were able to get a time landed with him for the interview. We've got a lot to talk about. What are you thinking on the IREN front right now?
Very, very positive on IREN. They've achieved their 10 exahash sooner than they planned. So it was achieved at the beginning of May. They then decided that they'd let the market know they were increasing their growth strategy from 20 to 30. So we were having a podcast, which we did recently, about those companies we felt had a challenging target to get to. And we included IREN in that group because they were, the start of the year there was sort of 6 exahash, and they were having to grow 14 exahash in 1 year. I mean, it took them 2.5 years, nearly 2.5 years to get to 6 exahash, with a couple of hurdles to cross over in that period. But remember that they have to grow on one site. So that's the key thing when you look at some of these companies like IREN and Riot Platforms. They're growing on one site, so it becomes more manageable then in terms of staffing, in terms of management, in terms of focus. Energy can be created on that one site, and we should see regular updates. I mean, if they're going to grow 20 exahash in the next 7 months, those buildings will come up far quicker than they have been doing recently. So they've got effectively 5 of those buildings built now. They're 20 megawatt buildings, and they'll need to at least double the amount of capacity that those buildings are already bringing in to get anywhere close to what they're supposed to be. So we'll see these buildings go up, and they'll start increasing that hash rate. So we should be seeing, in the region of 2 to 3 exahash every month going forward towards the end of the year, unless they tell us otherwise. So they've got 7 months left. They've got 20 exahash to achieve. So it's a challenge there. But the market is waking up now to miners with hash rate, and that's evident with the IREN share price, because a month ago it was hovering around 600 million in terms of market capitalization, and they had 8 exahash at the time. And today it's at nearly 1.2 million, so it's on a par with Cypher Energy now. And it's getting recognition for having this strategy going forward to get to 30. So 30 will put it cleanly in the top in the top tier of miners. But they're being measured on achieving that achieving that target. So with all these mining companies, we'll be following closely at the monthly updates to see how they're doing. As aside from the self-mining business, they're also fully focused on delivering the HPC side of the business there, and they're not holding back on that there. They're growing that business there. They can see that there is benefits to go into that space, and those benefits have been articulated with the likes of Sam Tabar on the channel recently. And we're going to have Dan on the channel, and Dan is another one of these CEOs that can really articulate the strategies that they're doing, in a way that makes people understand it and reason why they're delivering that. So that'd be a good, interesting chat on when we talk through about the non-hodl position, talk about the HPC, talk about the growth. There'll be some interesting there. And by the way, if people have got questions for Dan next week, put them into the or DM me or put them into the comments, and we can try and include some of those questions, because we do use your questions as well when we speak to these CEOs. It's not just Bryce and myself. We'll do a few together, but we'll also take a sample of questions from the followers as well. So look forward to seeing those.
Yeah, that'll be great. Now, we're getting a lot of questions, Anthony, about Bitfarms. Obviously, you guys, we're going to get into that in 1 second here. Anthony, I just wanted to ask, in your opinion, we saw Bitfarms come out and state they've now had multiple unsolicited offers. Do you think IREN is in the discussion in terms of M&A at all this year? Or do you feel like IREN's got a pretty good growth plan organically in-house, and you don't expect to see them involved in a lot of M&A?
In terms of IREN acquiring or IREN being acquired?
Either or, to be honest. I'm curious to get your thoughts, because I know IREN up until recently was very similar in size to Bitfarms, right?
So if you look at what happened yesterday, and people have been suggesting that Marathon would go after Bitfarms a month or so ago, and the numbers that were quoting, buy Bitfarms for 600-700 million, and you get this exahash there. And I said clearly at the time it wasn't going to happen. You're not going to get Bitfarms for 700 million. And yesterday we saw that Riot had been slowly accumulating stock, and yesterday evening they achieved their 10% of the total number of shares. So they are the biggest single shareholder now in Bitfarms itself.
Here, hold on, Anthony. I'll just jump forward to the article here while you're chatting about.
I just wanted to use this as a comment before I go on back onto IREN. So really, when we saw that yesterday, and then you start thinking about why, in terms of generality, why would Riot consider buying Bitfarms? You then got to think about the discussion that we had with Jason on the podcast, and Jason was telling us that the times and opportunities to get sites now are going to be more difficult. We've seen CleanSpark pick up some sites. We've also seen CleanSpark have pick up some sites that the government have now turned around and vetoed because they're too close to a military establishment, and so that makes it when you don't get the sites that you're looking for, you've got to then go and look elsewhere for sites. So, infrastructure it looks like the infrastructure now is the bottleneck that's going to affect miners growing. Bitmain don't seem to be the bottleneck anymore. People have put massive orders in and they're getting deliveries on these orders. We know they're getting deliveries on these orders because the global hash rate's increasing. So after yesterday's announcement, I'm then thinking, well, if Bitfarms is a candidate for acquisition, would that not put IREN into the same bracket? Because they are another great company. So operationally, you put IREN, Bitfarms, and Hive as from an operational point of view, from a performance point of view, as sort of like the top three miners, and not just 1 month, Bryce. We're talking 3 years that they've been at the top of the table. Yes, other miners come in occasionally, so we've had some other miners occasionally coming in there, but we're talking about consistency. If I look at, since I've been covering this space, and I had to name 3 miners that were producing more out of their hash rate than other miners, so delivering every month and not having many bad months. I think Bitfarms have had 1 bad month where they were like 7th out of 15 instead of first. Generally, they're first or second. So iron generally in the top 3, Hive generally first or second. So there's so that means they run a good business. They do exactly what it says on the tin. They produce Bitcoin. They've got the site to grow to 30 exahash. So is this again potentially a target now for the likes of Marathon, CleanSpark? Riot have made their interest in looking at Bitfarms there, and you might, Marathon have got a 20 exahash target to achieve this year, and they've got to buy sites. They've got to buy. I think they've got machine orders to manage that. They've certainly got the cash to manage it, but cash isn't the bottleneck. It's the sites that are the bottleneck. Where are you going to put the miners? And we've been through this before. Marathon have had this issue before, where they bought all the machines and had nowhere to put them. So 2022, and we can say now, in hindsight now, but they had about 80,000 machines in garages waiting to be sent to sites, because that was the bottleneck. It's the bottleneck now for mining companies to get these big sites, or even when I say big sites, we could be talking 100 megawatt sites or 200 megawatt sites, not a gigawatt site, not a 700 megawatt site or a 600 megawatt site like the Children's site there. So I think iron potentially, if people are making a move for Bitfarms, yes, iron's valued, a bit more. Both companies have got zero debt on the balance sheet. Bitfarms has an amount of Bitcoin. I think it's about 830 Bitcoin. So they've got that on the balance sheet there. Iron doesn't have any Bitcoin. They've got a HPC business. They've got 10 exahash plugged in. They've got orders to get to 30 exahash. They've got a site that can deliver on that. So that ticks a lot of boxes. So, if we're looking at companies that, could be up for acquisition, you'd probably have to say iron would be in that same sentence as Bitfarms, because again, yes, they're going to be more expensive to purchase, because there's a lot of synergies in having that site there at Childress. It's a massive site, 600 megawatts. You just keep building out that capacity there. Plus, Bitfarms, Iron already announced the fact that they've got additional sites that are ready to be, constructed. They've already got, permissions on those sites. So they bought sites that they can plan in the future. Now, bear in mind, when you've got over 600 megawatts and you're looking to grow even further, you're not having to probably at this stage of the game break ground on those, but it gives you opportunity. And if they have got the opportunities, that's a great selling point as well. Now, we're not saying that either of these companies wanted to be acquired. What we're saying is, could it be possible that they could be acquired? And the answer is yes. Could Iron also look to acquire another miner? I suppose, if you look below Bitfarms, the next miner below Bitfarms in terms of market capitalization is now Hive Digital. And Hive Digital have got 5 exahash. So they've only got 2 exahash less than Bitfarms. But the valuation of that company is about 240 million. So even if you pay a premium, even if you said pay twice as much as the value of the company and pay half $500 million, and you get 5 exahash, you're going to end up paying more than $1 billion for Bitfarms. We've seen that yesterday. They've offered 930 million in terms of share price and the number of shares, but the shareholders came out yesterday, and the sentiment across the social media platform was pretty much that's too cheap. And I think even some of the people in the space who are probably closer to this. So Mike Alfred was putting out his opinions yesterday, and he suggested that maybe between $3 and $5 is a fairer figure for Bitfarms. So if it gets to $3 or $5, you're into serious serious prices. So by going for Bitfarms, it's opened the gates open for some of these other miners to be acquired.
I think so too, Anthony. And just a quick shout out, Sebastian just joined in. I guess he's on his lunch break. I caught your podcast last night, Sebastian. I know you were chatting a lot about the Riot Bitfarms news as well. So appreciate all the information there. I guess we'll learn from each other here, buddy, and enjoy the lunch. The other thing I wanted to say, Anthony, as you're talking about megawatts, I'll put up a quick Wolfpack call out there. You guys feel free to do your howls in your house, but the Wolfpack, Paul Prager put out a tweet last night in relation to one of our videos talking about the importance of megawatts and having megawatts under management. So we're actually going to add that component or metric to our website as well. But you're exactly right, Anthony. It's really interesting to see at different points in the cycle. Sometimes it's the mining rigs, sometimes it's access to capital, Sometimes it's access to facilities and power. And it seems like that's where we're at now within this cycle. So just a quick shout out to the Wolf Pack and Paul and team for having access there. Now, the other thing I wanted to just quickly bring up, Anthony, yesterday in our video, you talked about the cost to build out exahash, right? And you threw out some numbers. We talked about the $650 million range in terms of what it would cost to build Bitfarms from the ground up. Obviously, there's external costs and I guess uncontrollables in there. But we got an interesting tweet from Dan Roberts that really, I guess, validated that calculation, Anthony. So we wanted to just quickly run through this, you guys, just so you understand where these numbers come from when we're talking about the cost to build versus acquire. Probably don't need to spend a ton of time here, Anthony, but maybe just run us through these.
Yeah, my costs, in simplistic terms, and they are simplistic terms, but they're understandable. So we know that the S21 Pro is about $19 a terahash at the moment. But if you've got coupons, you'll get it cheaper. So the likes of CleanSpark probably been paying about $16. I think they announced $16 for the S21. So I put in $19 there, or $19 million per exahash, which is a reasonable assumption. So that's getting your miners, getting them shipped, and 21 exahash there. That's just under 400 million. Infrastructure, we've also got some costs from CleanSpark as well. So CleanSpark have been buying up sites, Mississippi, Georgia, in recent months, and paying something like 8, 9, 10 million per exahash. So again, I made it to 12 million exahash because there's always going to be some sort of other costs that you're going to have to you're going to incur. So, that basically supported the figure I quoted in the podcast yesterday without having really the numbers in front of me. So total cost about 651. I've seen a tweet from Dan, and he's suggesting that from an iron, they're producing 1 exahash at about 30 million. Now, if you times 30 million by 21, you get to 630. So, effectively, Dan and myself are on the same page in terms of, the basic cost there. And that's just looking at a very, very high level.
Yeah, and why this is important, you guys, is it's very difficult to piece this all together, and it's very difficult right now for ourselves or Sebastian or anyone else in this space to value how difficult it is to find these sites and cheap access to power. And that's really the X factor here. That's why we see these market cap variations between 25 million in exahash all the way up to 185 million in exahash. And that's the variable that I guess, to be honest, Anthony, we weren't considering when we were talking about M&A before.
No.
Yeah.
Because
so
we
had
the discussions in 2021, 2022, when the Bitcoin price started to drop from its all-time high in 2021. I attended conferences in early 2022, and the theme of those conferences was about M&A, and they were saying there's going to be loads of M&A in 2022. And to be honest with you, there wasn't very much at all. The only M&A activity we really had is the merger of equals in Hut 8 and USBTC. However, yesterday's announcement suggests now that there could be quite a bit of M&A activity in 2024. If you're going after the likes of Bitfarms, it just makes you wonder which of the miners out there are probably right for growth there. But obviously, it's going to be a challenge, for miners to find these new sites and get a site that's got access to cheap renewable energy. I don't think the mining machines themselves are the bottleneck. It's the sites with the energy associated with those sites. So
Agreed.
It could be a good move for Riot, and interestingly, they submitted their initial offer to Bitfarms back in April. I think it was April the 24th, and it was rejected. And they've just been, since that period there, they've been buying shares in the company, got to the 10%, and now they formally
I'll jump into that, Anthony. I think that's next up here. We can come back to the Bit Digital flywheel, but we wanted to get into the Bitfarms and Riot because you're exactly right, Anthony. The big news came out yesterday. So in this situation, you guys, you got to make sure you look at both sides of the coin. So we'll put on the Riot hat for a second here, Anthony. And the Riot actually, in addition to the announcement yesterday, the 9.25%, the takeover bid, the $2.30. They then put out a PR last night talking about, hey, you know what? We've now gone ahead. We've increased our stake to 10%. The irony of this is they offered $2.30 a share, but it looks like they were able to pick them up a little bit cheaper than that. But Riot now has a 10% stake in Bitfarms, regardless of what happens with this M&A. So I think that's a big asset to Riot and a big, I guess, confirmation for Bitfarms that they're doing the right thing. I'll let you give your 2 cents on this one, Anthony, and then we can jump over to the Bitfarms side of the story as well.
Yeah, I mean, from Riot's perspective, it's a great opportunity to buy, and yes, they'll end up paying if they are successful. And it's a big if they are successful. Lots of moving parts. We understand they're not the only company that's interested in Bitfarms now, because Bitfarms announced today there was other potential buyers out there who submitted offers as well. So, but Riot, we know, have got the cash available, so they have the cash available to buy that company outright, and they have the resources as well to carry on delivering on what Riot are doing at the moment. So Riot have in their balance sheets have got something like just under 90 million of deposits for mining machines. That helps them get towards their target, not the whole of the target, but gets them towards their target of 21 exahash. They've still got another $156 million to find to cover the balance of those machines. So again, that's in their notes to the accounts. So they still have to find that money. So whoever, if it does go through as a takeover, that the new company will have to find $156 million to meet that requirement there. And Riot have already suggested in their update here that they can make every effort to meet all the growth strategies that Bitfarms have got in place, and have the power of the one big company. It looks like the Bitfarms would form something like 17% of the effectively the new Riot in terms of size. So it just goes to show you the difference in not just in size in terms of hash rate, because if you look at hash rate itself, Bitfarms are operating at 7. Riot are actually only operating at 8.8 at the moment, so not massively more than Riot. They have got about 12, nearly 13 exahash plugged in, but they're not operating at that level because of quite a few of their machines are not working to the correct level. So they're going to replace those, and they're building out Corsica at the moment. So a lot of the premium in Riot's market capitalization is based on the future, based on Corsica, based on the growth in hash rate. And if they can acquire Bitfarms, it makes that bigger company, which will have a combined hash rate of nearly 52 exahash by the end of the year if everything is achieved. So again, it's they already had significant target on their own to get Corsica and the Rockdale facility working operationally maxed out to get to their target of 31.5 exahash by the end of the year. Taking on Bitfarms as well to manage that is going to be the challenge. But if they do that and they're able to keep hold of one of Bitfarms' biggest assets, which is effectively Ben Gagnon, who's the chief mining officer, then that puts them in a good position to do that, because I think that would be a real coup for Riot, whoever takes Bitfarms over, not just necessarily Riot, but you're getting probably the most respected or one of the most respected mining officers in the space at the moment. So I know Ben is well thought of by every company, and if he was ever interested in leaving Bitfarms over the last few years, I'm sure he'd have had 15 other offers from the other miners that we look at to go to their companies. So,
well, and Anthony, it's worth noting, you guys, if Bitfarms gets taken over, because it may just continue to operate as a standalone entity, and they're happy doing that too. Anthony, one other question that came up that's really relevant right now. You mentioned if this all goes to plan, Bitfarms would essentially, or Bitfarms shareholders would make up about 17% of Riot. What would happen to the shares in that situation? I know generally, if both companies are publicly traded, the shares convert to the purchasing company. Sometimes there's cash buyouts, but generally that's if a company's taken private. Would you expect shares to just be converted to Riot at the equal overall value?
Yeah, it looks like Riot have got all the approvals in place to do it. So it could be a case of they'll issue Riot shares and replace the Bitfarms shares that people have got. So you get part of the effectively what they call the new Riot company. Gotcha. Or it could be that they decide, if they do buy it in cash, then the shareholders receive shares back in cash. But I think it'll be probably new shares in the company. Right have got sufficient to do that, but
I was just going to say they'll
use that money to, and it's cash there now. They can use that. They can pay off those mining machines, all the costs there, and carry on growing what they've got to grow in terms of Corsicana, because that's still got to be paid. I mean, they're announcing another big ATM. And they're having a shareholders meeting for that shortly. So, that's another, a sizable ATM in place there. So I think this could be, effectively a share transition from Bitfarms shares to Riot shares.
Gotcha. That would be my assumption.
And being part of that company will be, the synergy and that hash rate number. I will assume the market will like that and will actually give it, again, a bigger premium, because Riot's premium for having the hash rate there isn't as big as what the CleanSpark or the Marathon premium is. And you mentioned before about, value per hash rate. And Bitfarms at the moment with their 7 exahash and their value today is around about $85 per terahash in terms of value. Marathon is 180, CleanSpark is 199, Riot itself is about $144 per terahash. These are significantly higher, but if you look at Riot's premium isn't as high as CleanSpark or Marathon's premium. Maybe if they have this hash rate and then have the operational, if they get that operational fix that they need to start delivering where shareholders and the market expects them to deliver month in, month out, delivering that Bitcoin, maybe then they get that premium. I think that's what they're looking at. And if it's that way there, it's not just a win for Riot and the board achieving what they do. It's a win for the shareholders because the price will reflect that.
Yeah, shareholders of both companies in that situation. And Nikki just sent in a question directly about that combined entity valuation. Nikki, I'm going to come back to this one in 1 second. We've got some statistics to share with you. But before we do, you guys, I just wanted to quickly address the other side of the coin here. So look at this, you guys. We'll put on our other cap. Now we're on the Team Bitfarms here. This was interesting last night, though, Anthony. They came out in a statement, and I feel like we're in high school here. He said, she said. They said they've actually had multiple unsolicited offers expressing interest in this company. Now, HK just threw out a comment saying CleanSpark and Marathon are watching closely. HK, I would expect that's the exact two people who are being referred to in this statement. Anthony, do you think this could start a bidding war? And companies like Marathon, CleanSpark, we know they have a ton of machines. They just need somewhere to put them. Do you think they come in here and say, not a chance, Riot, we're going to outbid you and we're going to take that hash rate to the bank?
If the opportunity to gain sites is the bottleneck, then the likelihood is both of those companies would be interested in submitting an offer for Bitfarms at the moment. Effectively, you're buying a company that's significantly cheaper than the company that you have at the moment, and so you have some benefit there. And yes, we've highlighted that it can be cheaper doing it yourself. But if I went and ordered all the parts of my motor vehicle and tried putting them all together, it might work out to save $1,000 here and there. But I'd rather just go to the car sales room and just buy the car built for me by the company. So
where'd you get that analogy, Anthony? What kind of brilliant mind came up with that one? There's a lot of things in the world I could do for less that I pay someone else to do more because I don't want to do it. But no, great analogy. And I think that, so then that being said, Anthony, in terms of Bitfarms shareholders, they're in an okay position because in my mind, somebody's already offered 230. So really the shares shouldn't be much less than that ever. And there's an opportunity for a bidding war. And on top of all that, they still have the opportunity just to grow organically on their own, right? So some people have said, well, what should I do with my Bitfarms shares? We actually had Eugen just throw in a comment saying he's actually thinking to go the other way, jump from Riot into Bitfarms. I would say this is a huge vote of confidence for Bitfarms as a company, eh?
Yeah, I mean, but remember, it's the timing of this is when the Bitfarms share price hasn't grown like some of the other share prices are. So we do know, go back to February, March, and I think it was February or early March when the share price was closer to $4 a share. And now at the moment, before that announcement, it was hovering just over $2 a share. So, this is an opportune moment to do this. And even if you're paying a premium, you're still getting a reasonable premium. So, even if they have to go, upwards of $3, it's still less than it was 2 months ago. And I really don't know, in terms of, I have, for disclosure, I have shares in both companies, so I'm just going to keep hold of both shares. I'm not adding to the shares at the moment. I'm hoping that, that if a decision's like this and right by, then I'm going to have shares in a joint, in the company as a whole. And if they have 52 exahash by the end of the year, the market will reward them for doing that. So that gives them a, for me, a sense that there's a benefit there, because at 52 exahash and the valuation of the combined companies, even if you add Bitfarms to the likes of Riot, it's still less than CleanSpark.
Yeah.
And so that's the simplistic way of looking at it. And you're then going to have, one of the best mining officers. Although CleanSpark have they have Taylor as their chief mining officer, and he's done a great job there. But even Taylor himself will probably articulate that he even looks up to Ben Gagnon as lead in the mining space in terms of.
Yeah, Ben's a legend. He's a legend. And Anthony, you talk about some valuation metrics. I'll throw the next chart up here. So this is when we can really get into some of the analysis, you guys. But Anthony's put together 2 tables here just to kind of help us understand individually what these companies look like, but also together what they look like. So Anthony, I'll let you walk us through this. Then we can jump into some Q&A, because I know there was a lot of questions about this pro forma combined company.
Yeah. So the top table there is just basically looking at operational side of things and letting you know what the share price is today. So, this morning before the market opened, it was 221 for Bitfarms. 7 exahash operating at 6.1 exahash of that there. Plan to get to 21 by the end of the year. We know that their production numbers are really good. So, you can just compare, even though they don't produce as many Bitcoin as Riot, if you look at what they produce per exahash, they're producing 44.1 and Riot are producing 42.6. So they're producing more Bitcoin with every machine that Bitfarms have got. What's interesting, though, is the efficiency. So if you had to have one sort of like mark on the copybook of Bitfarms, it is their miner efficiency. So when we look for efficiencies of miners at sort of like a really good level, you look at likes of probably three to four companies. You look at Marathon Digital, look at CleanSpark, look at Iron, look at Core Scientific. Those 4 companies there are close to 24, 25 joules per terahash. And what does that mean? What that means, if you've got a more efficient miner, you're able to mine Bitcoin with less energy costs, because your machines are very much more efficient. And that's what that rating means there. So having a high number means that you've got less efficient machines. And there are a couple of other miners that have got efficiency levels probably at that level or slightly high, but a majority of miners are coming down with having bought these new machines. Now with Bitfarms, as they grow to 21 exahash, that 31 actually becomes 21. So they have a plan to really look at that efficiency. And when you're thinking about the halving and your rewards have been reduced by 50% since the 19th of April, you've got to think about your costs. And by having the most efficient miners, so having these S21 Pro miners with an efficiency of 15, when you have a big batch of those coming through there, and the T21s and the ordinary S21s, that 31 comes right down. They're going to get that down by a third, down to 21 joules per terahash. So that'll make sure that their energy cost for mining will be, really low. And we know that they've got energy prices in South America at around 2.5-3 cents a kilowatt hour. So we know that they've got great energy costs there. And again, this is probably another reason why, the likes of Riot and some other miners who we don't know the names, but we can probably guess, it's going to have to be miners that are bigger than Bitfarms to come in with that sort of offer there to make it a viable offer. And there's only 2 or 3 miners that could do that. And we've named both of those miners there. And so,
Anthony, just one point there. Do you think we would see anyone outside of the traditional mining community, like say a MicroStrategy or Tesla or someone like that enter this space, or do you think this is going to be M&A within the miners themselves?
If it was potentially like an energy company doing it, maybe an energy company could do it, and if they've got significant cash reserves and they want to just look at increasing revenue streams and profitability and margins, maybe they're there. I'm not sure. The industry it's still in its infancy. We're talking public miners have been going for about 6 years, so it's not like it's and because of the volatility that again will put them off. So I don't think so. I think we're looking at and bear in mind these mining companies were saying a couple of months ago there'll be lots of M&A activity. When I was in London at the AIM Summit, there was talk about M&A activity, and I thought I heard the same conversation on the same panels 2 years ago, and it never happened. But actually, if this happens now, and bear in mind, this could take a year to go through. It took a year once shareholders had approved the Hut 8 and US BTC merger. So this can take a significant amount of time there. So the last part there, utilization, basically again showing that Bitfarms has reasonable utilization. It doesn't score the highest utilization because it for some reason it never quite gets to its maximum hash rate capacity, and there are a number of reasons for that. You have miners are curtailing energy, they're switching off, they're powering down when the demand requires it. Weather conditions can affect it. So but it's in terms of what it does every month from mining with the hash rate that's online, it does really well. The table below then looks at more towards valuation. So again, Bitfarms this morning was valued at $738 million. Riot just a shade under $3 billion. Then we look at the enterprise value, and the enterprise value takes the market capitalization, it adds back any debt. Well, that's quite easy for these two because they haven't got any debt. And then it reduces the market capitalization by any cash or equivalents and any Bitcoin held on the balance sheet as well. So that brings that number down there. So Bitfarms have an enterprise value 616 million. Riot's comes down really because they've got such a big hodl, such a big cash reserve, 1.74 billion. Price to book ratio is effectively what's the share price compared to the total amount of net assets in the business. So in terms of Bitfarms there, for every $2.57 you're spending on buying a share in Bitfarms, you're getting $1 of assets on the balance sheet. So with Riot though, you're getting, you're literally not far away from parity. So really, for every dollar you're investing in their balance sheet, you're getting literally $1 of assets, and that's so Riot's is in terms of price book got a really good metric. And there are a couple of other miners who again are at parity. I think Hive Digital are close to parity. Some of the very small miners are very much close to or even better than parity, because Soluna Holdings would be put less than 1 because they've got a lot of assets, and the market capitalization is so small for that company, but they've got really big assets on the balance sheet. Then we come to the value by terahash for the current hash rate and for the future hash rate. And as I articulated earlier, Bitfarms $88. So the value of of that 7x hash at the moment, $88 a terahash. Riot's 141. So Riot's, it's higher than Bitfarms. But if you look at Marathon, you look at the likes of CleanSpark, significantly higher than that number there. And then we look at the value if they both achieve their end of year targets. Now, this is just using the current position now, but you could argue that some of the future expectations built into the share price. So, that's one way of looking at it. But as these companies get closer and closer to achieving their targets, I think the market then starts to build in more of a factor of appreciation for that, and gives them, that they'll probably get a higher share price, because it's the closer you get to achieving that target, you get rewarded for that hash rate then.
Sure.
And if you look at Bitfarms there with 21, it goes down to 37. Well, I can tell you if Hive achieve their 8 exahash at the end of the year, their figure's something like 21. So when we say Bitfarms the only company out there, there are other companies not that much smaller than Bitfarms, good operators who are even cheaper than Bitfarms. And so it'll be interesting to see if we get any other announcements. Riot, because again, they're growing significant hash rate, theirs gets down to 55. And I think if I remember rightly, I think even with the Marathon and CleanSpark, it's still over 100 if they achieve their target. So you're looking at, the market is not rewarding Bitfarms and Riot at the moment anywhere near what they're rewarding some of their peer miners.
Well, and that's that premium they're looking for, right? They're saying sometimes premium can be viewed positively or negatively depending how you're looking at it. Jason and Riot are saying, hey, why aren't we commanding the same premium as some of these other tier 1 miners? And that's really what they're trying to go after, you guys. So realistically, depending between enterprise value, market cap, you're looking at Riot, I guess, about 3 to 4 times the size of Bitfarms, just to put it in comparison. Now we're going to move into the Q&A section here, Anthony. We've got a number of good questions already in the feed here. The first one I wanted to bring up is actually to do with the S&P. So we talked about some of the indices earlier in the week, and in respect, I think, to the Mara being added to the S&P 600. Obviously, there's the Russell 2000, Russell 3000. But this is obviously a big benefit for these CEOs, because once you're in one of these indices, there's habitual repeat month after month buying ongoing. What are some of the other benefits of creating this Goliath of a company, Anthony? What would Riot, aside from the sites, aside from the exahash, what are some of the synergies here, like exposure to the market, access to capital, elimination of redundancies, even staffing? We know right now the Bitfarms CEO position is vacant. I'm curious to see what happens there, whether they backfill that while this goes through, whether they're in discussion, they put that CEO search on hold. What are some of the benefits and synergies of combining businesses like this?
You are going to save an element of staffing costs, but bear in mind, these companies don't have significant amounts of staff. I mean, Riot will have a lot more staff than Bitfarms. I think they're over 400, but they're building out a site called Corsica, 1 gigawatt site. When that's completed, a lot of those staff will go because they're probably there for construction. Bitfarms have probably got a reasonable level of staff because they operate in, I think it's 13 locations now. So if you look to the update from Riot, they said the joint position in terms of sites would be 15 if they were to acquire Bitfarms. So we know Riot have only got 2 locations because that's all they have. They have the Rockdale facility and they have the Corsicana site there. And so staffing, from a staffing perspective, yes, there will be some savings, but generally you still have to manage these sites that the companies are at. From a de-risking point of view, though, if you're operating in 15, 16 sites, you don't have all your eggs in one basket. So therefore, if something happens to one site, it doesn't affect the other, potentially doesn't affect the other 15 sites there. If you have an issue with one site and you need to move machines to another site, you potentially have, maybe capacity at other sites straight away rather than going out and having to look for new facilities. And so, there are some synergies of this of a merger of this size for both companies, and we've seen that sort of happen with the new Hut 8 merger. One company had a great balance sheet with a massive hodl of Bitcoin. The other company had no cash and a load of sites, and so what the other wanted, the other had. It worked in both directions. So that was a great synergy. Here, this is really, from a selfish perspective, Riot are just looking to grow hash rate quickly. They know that the market is rewarding hash rate. They've seen it. They've watched Core Scientific fly past them since October 2023 and just gain momentum and not only grow hash rate, but utilize their hash rate well over that period. And we said it before, 2024 has got to be the year for Riot because they had a poor 2023 in terms of operations. In terms of strategy, they had a good 2023 because they were able to alleviate their energy and sell power and make money that way there. And so, but from an operational point of view, everybody looks at what you produce in Bitcoin. You're a Bitcoin miner, produce Bitcoin, and that's what they want to see. So there are benefits that Riot can see that, and but obviously I think I'm in the same position as the shareholders at the moment. I think the price that they've offered is probably not enough.
Not going to cut it. Not going to cut it.
And we've said before when we talked about this a few months ago, and I actually think I articulated 40-50% premiums, would be reasonable in the technology sector, and so therefore you'd want to look at that. I don't see it going like $5, $6, $7 because that just makes it unaffordable in terms of you're paying a premium then of billions of dollars because you've got sites now. And if you had your teams out there looking for that, we've had Bitdeer on the podcast, and they've got they've just broke ground in Ohio, 200 megawatt site there. They've got a 500 megawatt site in Bhutan. They've got a 170 megawatt site in Norway. Mining companies, when push comes to shove, can go out there and find sites. We've just seen Marathon Digital, with a venture now in Kenya. Not totally surprised at that whatsoever, because we highlighted on previous podcasts 6 months ago that 3 of their C-suite directors were out in Africa looking at sites, and you don't send 3 of your directors to a country unless you're very serious about going there.
For sure.
So it's real synergies in terms of de-risking, growing hash rate quickly, being ahead of the game, being the biggest miner in the world. It's all about where you want to finish on that table, and Riot are putting a marker in the sand now. Them and Marathon had a lot of opportunity 3 years ago to grow quicker than every other miner because of the Nasdaq, and rightly, as the question came out there about growing onto these other indices, you then become eligible for more shares to be bought because of the fact that you have to buy.
It's a self-fulfilling prophecy, really. That's what happened with Tesla, right? You start growing.
And if you look at the premium that the market's giving, MicroStrategy does one, apart from its small software business, because we can say small now because its market capitalization last time I looked was like 29 billion.
Yeah.
But the revenues achieved from its, I think it was like 500 million revenues in terms of its software business. It's giving a premium of literally 100% on the Bitcoin value in the.
It's insanity.
So,
Anthony,
yeah.
Speaking of MicroStrategy and diversification, you've kind of set us up for this one. We got a comment here from Aiden that's saying, hey, can we pull up that Bit Digital flywheel? And Anthony, as I'm listening to you talking about MicroStrategy, it's interesting because Sam Tabar was on the program recently, and he said they want to be considered the MicroStrategy of Ethereum. So I thought this was super interesting, you guys. So for those of you who aren't super familiar with this is Bit Digital we're talking about now, BTBT. Sam Tabar has been on the program a number of times. Very passionate CEO, very smart guy. He's talked about this flywheel strategy that they basically came up with. So just to walk you through how this works, at the top of the circle, you've got the sustainable Bitcoin mining going on. That's going to obviously generate Bitcoin rewards, right, in the form of your Bitcoin payout. Now, what Bit Digital is doing, most companies at this point, Anthony, they're either going to sell that Bitcoin, like we see with the likes of Wolf and Iron, or they're going to hodl that Bitcoin. Bit Digital, very interesting. They actually exchange that Bitcoin for Ethereum. They then put Ethereum, keep in mind, Ethereum's on proof of stake, not proof of work, proof of stake, not proof of work since the fork. They put it into their Ethereum account. They stake that Ethereum. That generates some staking rewards, and then they can use that to put back into the wheel. I absolutely love this strategy. I loved it even before the Ethereum ETF. I love it even more now because obviously as the value of Ethereum goes up, the staking is a percentage of that value. So the staking reward is going to go up. I don't understand why other companies don't do this, Anthony. It seems way better use of capital than having cash sit in the bank. What are your thoughts here? I understand some companies, Riot, you said in the other interview, because of their agreement with the energy grid there, they have to have cash in the bank. So some companies have to have a big balance. But why do you think other companies aren't doing this?
I don't know. There are a number of products out there that companies can look into in terms of de-risking the value of Bitcoin or the value of what we call hash price, so revenues that are coming in there, ensuring that they're able to, their energy prices consistent. So Riot have got a PPA agreement, what they've got there, and for 345 megawatts. And you're quite right. They have to hold a significant amount of balance in their account to mitigate any changes or vast change in the price of energy in Texas. But I like this. I mean, this is unique to Bit Digital, and I think they are the company with the largest Ethereum balance on their balance sheet, and so they're just making the most. They're making the most use of that balance there, and it's like you say, it's just a constant wheel there. We know that a lot of retail investors also do a lot of staking with their Ethereum holdings. I think if you had 10 Ethereum, you were able to operate a node and do staking, and you're getting benefits for that there. So there are people out there who managed to buy Ethereum when it was a lot cheaper than it is today. It's probably close to, I don't know, $3,700, $3,800 a coin. It was as high as 4,000 this week, and again, it's year high recently. It got to over 4,000. So it's been moving up, in a similar pace to Bitcoin. I always look at the value of Bitcoin in terms of the whole of crypto, and Bitcoin generally is about 50% of the whole of the crypto valuation, and Ethereum's around about 16-17%. So those two coins, the top two coins, represent 67% of the whole of the crypto. So the other 13,000 coins represent 33%. So that gives you an indication. And if you took the top 10 coins, you're probably close to, I'm going to say, probably close to 85% of the whole of crypto. So
that's why they call them shit coins, Anthony. They're
I was coming on to that, but you just got me to the punchline there. So, so I like this. It's not a big. Let's be honest, it's not a massive revenue earner, but it's a nice revenue earner. It can bring in $100,000 a month, and that's $100,000, without having any costs associated with it. So it's quite a nice little revenue stream there, and.
And not to mention the value of the Ethereum, right? If Ethereum doubles,
the Ethereum increase in price is a bonus. And actually, with the spot ETFs being approved now, once the companies are able to physically buy the ETF, because there's an approval, and then obviously there'll be time before they start physically, being able to purchase those. That will probably give momentum to the Ethereum price, like we saw with the Bitcoin price since the 12th of January, since that approval, and we've seen the Bitcoin price rally from 43,000 all the way up to 70,000 as it was at the weekend.
Yeah, you got to think it's bullish for Ethereum, and Sam Tabar and team were in perfect pole position for this. It was widely understood that thought the ETF for Ethereum would not get past this quickly. And we've invited Natalie Burnell on the channel too, Anthony. I want to do an episode about Bitcoin and politics, because I think there's a lot of political gamesmanship going on now with some of these approvals and things. But that'll be for another episode. Now, Anthony, we got a question about CleanSpark. So we haven't covered them in a while here, talking about their $800 million ATM. I'm just going to bring up the graph that shows the current share price of all of these companies as we're talking through this, Anthony. CleanSpark, interestingly enough, yesterday they hit 1880, I believe. They were doing really well, up about 7 or 8%, similar to a lot of the other miners. Really fell back. This morning they were trading in the $17 range. I think we saw Matt and team sell shares around the $23 range was kind of the high point, I recall, this spring. What's the update on CleanSpark right now, Anthony? They've been abnormally quiet. I know, Sebastian, you called out that Matt Schultz has been quiet on Twitter. Do you think that's because they're working on a proposal for Bitfarms, or what?
I mean, the likelihood is if there are more people or more companies looking into Bitfarms, as we said before, you'd have to include their name into the short list. There's only a few miners that could do it. Certainly in North America, there might be a miner in the Middle East as well, but I think this is more of a North American miner M&A sort of type acquisition, and I think there's three miners that stand out. Right, I've obviously put the cards on the table, but I think CleanSpark and Marathon could be names that are in the hat as well, and this will be an interesting play to see how it figures out there. I mean, we know that Marathon have got the resources to do whatever they want to do, so they could probably outbid CleanSpark and Riot in terms of if they really wanted it, because they have those resources. They've got 17.8 thousand Bitcoin on the balance sheet, and they've also got a massive amount of cash, and they've also got a massive amount of ATM available to them as well. So CleanSpark have got 800 million ATM there. Bear in mind, the 800 million ATM is also being used to cover some of the final payments for these mining machines coming in through this year. So, you know, at the moment they're at 17.3 exahash. They're going to 32. So another 15 exahash coming through. Yes, they will have made some payments, deposits for those machines. And, you know, you'll have to make payments later in the period as you get closer to delivery. And then I think with some of these contracts, there's even payments after delivery, because Bitmain have been a little bit more generous now with what they've offered. Before, you had to, you know, go back 2 years ago, if you were buying a mining machine for $10,000, you would have to pay $3,500 when you made the order, $3,500 over the few months before delivery, and a month before delivery pay the remaining balance. So Bitmain had the $10,000 a month before delivery of the machine. All the payments were made then. But now we've seen Bitmain allow 20% to be paid post-delivery. And I think in some cases I read, I think it was like within 12 months of delivery. So that's really generous terms. Maybe that Bitmain needed some, you know, some funding and offered those great terms to mining companies, and quite a few jumped in and took them up on it. So I think CleanSpark one of them. But you still have to make the payments, have the cash available. So like the big companies, they've been making use. I mean, they've sold more shares than pretty much any miner has sold in the last 18 months. CleanSpark, they sold the company a number of times, but what you've got is a company that's valued today at you can see there 3.9 billion, and in October, which was, you know, 8 months ago, it was 600 million. So, you know, it's up, you know, 650% since then. So that's you know, shareholders should be quite pleased with that. But you're going to get shareholders saying, well, they're selling shares every day. But the only way to grow in this climate at the moment, debt's not the option. So you've got sell Bitcoin or sell shares. And, you know, most of the companies now are selling shares to grow. You know, yeah. the gap's forming. But yeah.
And what's interesting on this, we're going to talk about Wolf next. I saw Woodstock, you threw a comment in there. You're the only Wolfpack member here today, I guess, buddy, but we'll get into them. What was interesting, though, we talk about self-fulfilling prophecies, and I've always, as a student of life, said, fake it till you make it. My uncle taught me that, and it's an awesome way to go about life, I think. And what really came to fruition for me last week was when IREN announced that ATM. Just the announcement of the ATM and subsequent announcement of exahash to 30, that created such a rally in their share price, Anthony, that the share price went up so much in market cap. They were selling these ATM shares into a higher market, right? Because keep in mind, you guys, ATM is based on the value, not on the number of shares. So you have to sell half as many shares if you're selling them at $10 versus $5, for example. So just the fact of them making that statement, driving their share price up, and then able to sell shares into that strength, the ATM almost paid for itself just in the communication of the ATM. So on the other side of the coin, you've got companies with lower market cap here that are using ATM, but they're selling into weakness, right? And that's really not a great position for the company or for investors because you're adding selling pressure. The share price is already depressed, and you're having to issue even more shares to hit that dollar target, which further dilutes. So it's interesting to see the timing of these ATMs and the fact that some companies have had a real success, some companies not anywhere to the same level. Now, Anthony, I want
to add to that, Bryce. So what
Sure.
was interesting last week is that Paul effectively did a 180 on his views on ATMs, because Patrick Fleury, the CFO of TeraWulf, went out for dinner with Mike Alford, who's a director of IREN, and they had a discussion about the use of ATMs. And it looks like that conversation from Mike gave Patrick a different view that he wasn't looking at initially, and so he's very much more now thinking of that. I mean, you know, TeraWulf have used, you know, they've raised capital through selling shares over this last 12, 18 months, and it's not insignificant amounts. So that just to say that all these miners have been selling. There are a couple that haven't been. So DMG haven't been selling shares, but most of the miners that we cover have been selling shares, and some have been selling significant amounts of shares. Riot sold millions and hundreds of millions of shares. Marathon in the same bracket. Iron has sold a lot of shares in the last sort of 6 months. They really made use of the ATM, and we can see that they're starting to get the benefits of that now. CleanSpark, as I said, sold. They had 60 million shares 2 years ago, and they're at probably 230, 40 million now. So that's 4 times as many shares in the last 2 years. So that's effectively selling the company 4 times. But they've been able to do the last few ATMs when the share price has been significantly high. So they were selling shares when the share price was $20, $21 a share, before they just brought in this 800 million ATM. Which was announced. We all remember the date it was announced. It was announced on the day before Good Friday when the markets closed. So, but they'll put that money to good use. And I'm not sure if they were trying to link the fact they've got an 800 million ATM and the fact that Riot are looking to bid for Bitfarms for not much more than that. Again. The companies with these companies with 3, 4, 5, 6 billion market capitalizations would probably look at saying we'll just raise shares and we'll swap the Bitfarm shares for company shares and do it that way, and then utilize the cash balances for things that they can do with immediate requirements. So I don't think there's any correlation with what. That 800 million, I think they do need to use 800 million to get to their top. Bear in mind, they've got a target 30 at the end. They've got a target 50 million next year. So I think some of these companies are trying to build up the war chests so the cash isn't a limiting factor when it comes to buying machines. So they've got these massive orders in and option orders. So, CleanSpark have got an order in to get to 32 exahash, but they've also got an option to grow to 50 exahash. Now, they're going to have to trigger the option. And to trigger the option, you're going to have cash available. If you're going to buy 18 exahash of mining machines, we've just seen what it's going to cost in terms of the, in the previous cost now, what 21 would cost. So, you're looking at hundreds of millions of dollars, and having that 100 millions, and also the accommodation for these mining machines to go into. So CleanSpark are building the war chest. May not be for this year, but certainly some for this year, but looking at 2025 as well. And Riot are doing that. Iron are doing that. Marathon have been doing it for the last 3 years. Once they got the push on that as the first with Riot, the first 2 companies on the Nasdaq, that gave them so much access to capital that these other miners never had. So, hence you've got a real group behind Marathon and Riot. And CleanSpark managed to break through it. They used the ATM really well, broke through into that top tier. Iron looked like they're going to do that. Bitfarms, well, we're going to do that before this announcement, and work from there. Sure.
Guys, if you have any questions for specific miners, let us know. The next one on my list, Anthony, was Hut 8. We haven't talked a lot about them recently. I know they've been busy working away. Asher mentioned to us they've got kind of their revised game plan for the year. They're implementing that in Q2. We'll see the results in Q3. Do you think we'll see any M&A activity out of Hut this year, Anthony, or do you feel they've now kind of got the pieces they need? I asked this question to Sue as well, and she had to think about it for a second. Do you feel Hut 8 is safe to remove from the M&A conversation this year?
I think all miners will be looking at M&A now that this announcement's gone ahead, and I don't think Hut will be going after the likes of Bitfarms, but in terms of looking at maybe assets that could be opportunistic in terms of picking up cheaper assets with miners that are gonna have to look at alternatives they can't afford to carry on. It may be that they've got capacity, they've got sites there, they can grow, they've got places where they can put hash rate. The thing about Hut that sort of disappoints is the fact that the self-mining, we've not seen the plan with self-mining yet. I mean, they've got great hosting, great managed services. Self-mining as has really not evolved. And even though when they merged, it was at 7.2, but never operated at 7.2 exahash. Now they're telling us it's 4.5 exahash of operations. Again, like Bitfarms, they've got an aging fleet, so we've not seen any machine orders for Hut for probably the best part of 3 years, and we're waiting for that notice there. Are they going to be, focusing on their hosting and managed services, which are profitable? They're doing really well in those two spaces, and that's a lot of what the US BTC side of the business brought to the table. Very good at taking these sites, managing these sites, and getting paid for managing these sites. It's a nice premium. Then when they've bought sites, they've got hosted companies in there, and if you've got really good energy prices, you can make a nice margin too. I mean, we looked at what John from Soluna Holdings, what they're doing. They're predominantly a hosted business there. They've got twice as much hosting hash rate than they have in terms of self-mining, and they've got a really profitable hosting business. Another one is Bitdeer. They've got a profitable hosting business. But with Hut, it's about, what's the direction? They have the HPC business, so they focusing on, going to carry on focusing on HPC. They've got self-mining, they've got hosting, they've got managed services, they've got quite a lot of different businesses there. And what we do know from Asher is that, he won't take forward businesses that don't bring in the necessary return on investment. So there are elements to Hut's business that have been cut, and Sue articulated some of those in the podcast. So it's a case of watch this space. I think Asher's, and we'll give him till Q3. He did say, judge me in Q3, give me 6 months to get my plans in place. So by the time we get him on the podcast the next time, which probably in the next 2 to 3 months, get him on the podcast again and question him how the plans are going, because the results of those plans will be in Q3, but the plans will be in place. So, we ask the right questions, we get him to articulate. Obviously, we're not going to get maybe numbers, but we're going to get an overview of what's happening in the space. Are they going to have? Have they got orders in for machines? They should be notifying that when they occur. Most of the miners, can't wait to put out an update when they've bought new mining machines. It's great because it gives everyone a sort of like a nice relief to say, oh, I'm investing in this company, and they've bought 10,000 S21 Pros. That's great because we know we're going to get really good efficient miners mining Bitcoin at a really low cost value. So potentially profits will be, or margins will be really good, and we'll get benefit from it.
Yeah, no, it's one to keep an eye on, and I'm interested to see now. Like you say, Anthony, the floodgates have been open, so who's to say what's next? Now, we got one from Everton FC talking about Soluna, thinking about starting a position, not financial advice, obviously not anything on the channel. Soluna, though, Anthony, you can talk about Dorothy too, because I know they just secured funding for that, but John actually put out a tweet about 17 hours ago. I don't know if you caught that one, sealing 166 megawatt wind power, so renewable power, PPA, so power purchase agreement is what that stands for, for its Texas Green Data Center project. So that's huge, Anthony, in respect to what we were just talking about with Paul Prager's comments about megawatts are what matters now. Saluna coming out saying, hey, we've got 3-digit access to wind power here, 166 megawatts in an agreement. Plus, they now found the financial partner for the Dorothy 2 project. So Soluna is another one, you guys, that this is one I don't personally hold, but definitely have a lot of interest in this company. And I think John and team are doing a lot of things right there.
So that new power supply is going to be for Project Catty, which is their other project that had to go. So Dorothy 2, we've now got funding arranged, partner in place to take that project forward. And that's the great thing about Soluna, being a small miner. What they're doing things, they're growing organically. So they're going out and they're finding the business, they're finding the cheap energy, and then they're going to customers saying, right, we've got the energy, we can build the facilities and give you a return, and we want some capital money to go into that project. And so they can, pick the right partner to support them going through there, and there's a profit share type agreement for them, to do that. So I think, yes, they're a small mining company. We're going to get criticised. Saluna, we're mentioning Saluna in the same sense as we're mentioning Marathon Digital, and Marathon Digital has a market cap, between 5 and 6 billion, And Soluna Holdings has a market capitalization of probably been between 10 and 15 million. So there's a gulf between the two. But you know what? Soluna does things really well for the size it does. And we know that, it doesn't matter if you're, the size of Marathon. As well as for as many things it does well, Marathon, it does a hell of a lot of things wrong as well. So, production-wise, over the last couple of years, there's been a couple of months where it's actually achieved what it should have achieved, but the rest of the months it's been nowhere near. So, we do stutter sometimes, with Marathon. But then you can't not say, the good news that comes out, the deal in Kenya, the deal in the UAE, the deal in the Paraguay, buying sites finally. I mean, again, going back to the asset light strategy, didn't really work out for them, but that was what they were fully invested in there. Probably cost them a lot of revenue in that 2022 period when the mining machines weren't even able to be put on sites and plugged in, and you've bought machines that don't have a significant lifespan. Some of these machines last about 3 to 4 years because not only is it a case of the machines become the maintenance to keep the machines going probably becomes higher, but actually they bring out new machines with better updates. So don't buy machines, have them flown in from China and keep them in a garage for 12 months until you use them, because you've not only lost a year in revenue, but you're then having to compete with machines. When you start plugging them in, there's probably a better machine on the market so that you could have utilized.
Just like flat screen TVs, Anthony. It's always funny when you go to a hotel and you see where the TV used to sit and now it's converted to a desk and the TV's an inch thick on the wall. Same with miners, right? And
once you've had the latest machine, you don't want to go back and use older machines. It's like, you want to keep the current there. But, they did this because they wanted to make sure they had the hash, that the machines in place. But what they didn't have at the time was confirmation on some of the sites. And
Gotcha.
So now having that ability, by owning their own sites, they control their own destiny. So again, like Riot, let's see if Marathon's 2024 is the year for them as well, because they got their hash rate of 23 exahash at the end of last year. But to be honest with you, that was a target for 2022, so they were a year behind. We talk about delays in hash rate, and we'll find out this year. We were only talking about Bitfarms. Were they going to achieve their 21 exahash last week? And news now is they could be potentially an acquisition company for a number of miners, one of which is Riot. And it's a case of what happens from here.
Well, and speaking of Bitfarms, you guys, for those of you who weren't here at the start, we're going to wrap up fairly soon. But Ben, as of right now, is scheduled for Monday, June 3rd. Hopefully we can get him on. He's been a tough guy to tie down here. Obviously, a lot of travel, a lot of stuff going on internally with Bitfarms. But as of right now, we're confirmed he's accepted the invite for 3 p.m. Mountain on Monday. We also have Dan Roberts from IREN on Tuesday night. So that'll release either Tuesday or Wednesday. So make sure you guys, those are high profile interviews. If you have shares, you have questions, let us know about those. We're getting a lot of questions again, Anthony, about Core Scientific. I know we covered them at the start of the program here. I'll bring up that chart again. Maybe we can round out with them, talk about some of the strength we're seeing with cores, and tie up for today.
Let's just also, before we just talk about cores, let's caveat Ben on the grounds of we have got him booked in, but with all what's going on at the moment, they might pull the plug on that, and decide they can't say anything at the moment about anything. And if he wanted to come on the show, we want to ask him pertinent questions. I hope he does. I mean, we've had Ben on the channel a few times now. We know that when he comes on the show, everyone listens. We get really high viewing figures, and I really want Ben to be on the show. But Ben was supposed to be on the show Monday just gone, and that obviously didn't occur, and we now know the reason why. And let's just make sure that again, it's managing expectations. So I say this when we listen to the we've had 70 podcasts this year, and we've had 33 CEO podcasts, Bryce, this year. So we've had we've had over 30 podcasts with either CEOs or senior C-suite directors or chief mining officers of these companies, the people that you want to see, put it that way, from every company. And there's an expectation then that people want to see these every week. and quite a few of these CEOs, they go on Spaces meetings there, and what you've got to do is you've got to sometimes manage your expectation. 3 years ago, we had the likes of Peter Wall for Argo Blockchain. He did this brilliantly. He was on YouTube. You couldn't get him off YouTube. He was on YouTube like every week. He was doing Q&A sessions, and I bet there's some Argo shareholders on this call now. If there's any Argo shareholders on here who were buying shares in Argo in that early period of 2021, please type in the comments, because he was doing more shows than any of these miners added together. It's like, you couldn't get him off YouTube. But it's great when the share price is going up and the Bitcoin price is going up. Once there's a turn, you try getting these CEOs to come on and talk about, how the stock price is down 30%, how Bitcoin price has dropped 40%, and it's a different ball game. And you just got to sort of like manage expectations. So we'll try and deliver everything that we say we're going to do. We're going to try, and we put out all these, we invite these CEOs to come on and use your questions. So it's not just Anthony and Bryce's questions, it's your questions too. And I think you'll realize that I think we've grown in terms of from experience now. We are starting, I think certainly people remember the interview we had with Jason, and we pushed Jason on some of the issues at the Rockdale facility, and he articulated those. And in the next monthly update, they came out and addressed those issues about Rockdale. So we're trying. We're not going to throw people under the bus, but we're trying to get some of these tougher questions out there for these C-suite people to ask. Nothing that's not out in the public domain at the moment, but it'd just be a case of to explain some of the things that are out in the domain that people don't quite understand.
And that's what I was going to say with Ben, Anthony, is we need to understand, you guys, that some of this M&A discussion, they're just not going to be able. Same with the CEO hunt. Some of this is internal, confidential only, right?
And that's why I say is to manage expectation, because if it comes to Monday and Ben's unable to, we'll probably do, me and you can do a podcast. There'll be enough things out there to discuss. We never seem to run short of anything to talk about, Bryce. That's one positive between me and you. We can sometimes we come on a podcast, and you'll back me up on this. We've got no idea what to talk about, and for 40 minutes we'll just, and actually some of those are the best podcasts. We don't try and plan things. Today we've put some slides in, and yes, we'll talk through this, but we didn't sit down before here and say I'm going to talk this, that, and the other. We put the slides up there, and we're just talking through some of them like that. I've seen some of the slides for the first time in this presentation today, so it's not like we're sitting there for 3 hours thinking, right, we're going to go through this, and this. It'll be a case of like, what's the Bitfarms story is a big story that had to be
current events, right? You have to cover that stuff.
And we got in there, and we got in with one podcast, and Sebastian goes out and does 2 podcasts. So it's like
hey, that's all right. There's room for all of us.
Some news, we're going to do 3 podcasts. We're just going to up the ante. So he's put his cards on the table. He knows where he is now. He realised he's got to improve on what Power Mining Analysis does there. But
Anthony, we're eating into Sebastian's lunch break now, though, buddy. He can't even have lunch. Sebastian actually came and joined us today and said hi on his lunch break, so that was great.
Sebastian's great in this space, and we've had Sebastian on the show, and he'll be on the show again soon as well, because we like his insight into things, and he's happy to. One thing we don't do that Sebastian does do is he'll give his price predictions. We step away from that, because we're not the experts in this space. We're the experts in what's happened up to date. We can go back and analyze all the information that's there currently, but we choose not to give share price predictions, because we don't want to be beholden to like people, investing their hard-earned money into mining companies, and then it doesn't happen as we thought it might do, and then we don't want all that sort of like throwback there. But there are other people out there who are in this space happy to do that, but not for us.
As they say, my old boss used to say, Anthony, I've got 2 balls and neither one of them are crystal. So we'll leave the fortune telling to somebody else. You did get somebody in here who says they were an Argo shareholder. We also had a couple of questions from earlier. So private, I'll bring this up. I hope this is the one you were just saying you'll restate. I did have this one flagged. I don't know if we have an answer for this one, because it'll be based on shareholders voting, right? So the only thing I would say there, and Anthony, you can jump in, the chance of Bitfarms being forced takeover is higher, the higher the price or the offer price is. At $2.30, I would be surprised if shareholders would vote that through. I know personally, as a shareholder of Bitfarms, I wouldn't sell my shares for $2.30.
I think most shareholders in Bitfarms are not even at break even at that point. So why would they?
Exactly, right?
Why would they agree to take a I think if you're a Bitfarms shareholder and the expectation to go to 21 exahash by the end of the year, and then join some of these other companies that are in these multiple valuations for their hash rate, Bitfarms would expect a bit more of a premium. But there is a limit. There is a limit to the premium. So if people think $6-7, that's never going to happen. And people will bail out before then. Don't you worry. We're talking sort of like maybe 20, 30, 40% more than what's on the table at the moment, maybe. So we'll see how it goes. I mean, the more people that are interested in Bitfarms and starting now to understand about getting a company that has facilities, mining orders, a chief mining officer, if he comes part of the package, that's 3 ticks in the boxes there that you can't get elsewhere. So but I see the comment there, 4 to 5. I mean, I even think probably certainly over 4's probably maybe high, because again you're comparing this 650 million. If it's at $4, that's 1.4 billion. That's more than twice the cost of doing it yourself. Now, yes, time and effort. What price do you put on that? Does that premium justify that? So, but 4 to 5 probably puts them closer to what the value of Riot's been valued at. So that's like saying, if Riot's valued at just under 3 billion for its effectively, it has got sort of like 14, 15 exahash plugged in, although they're not all working really well. So 7 exahash, which is half that, just under half that hash rate that Riot have got, should that be given sort of like closer towards half the valuation? So should it be like the price should be probably between $4 and $5, gets them to that 1.5 billion valuation, which it puts them in line then with Marathon, still lower than CleanSpark, still lower than Marathon Digital. Still lower than Cypher as well. I think Cypher are valued. In fact, Cypher have got the similar hash rate to Bitfarms, and they're given a massive premium for their site. So they've got, I think it's just over 7 exahash in operational requirements. Bitfarms will be ahead of that by the end of May, and their valuation is 1.2 billion. So there is a real difference in price. What Cypher have got that Bitfarms haven't got is their energy price for the whole of their sites is about 2.7 cents. So they can raise a flag on that. Bitfarms isn't that far behind it. Bitfarms is probably, we look at all their sites, probably under 4 cents if you look at a blended price across all their 13 sites. But it's interesting now we sort of talking about it, we can see the numbers and start thinking about the strategies that some of these companies are thinking about. Whereas it was discounted before, because I think people were saying, we can just buy Bitfarms for 600 million of what it was valued at. That was never going to be the deal. And like you say, they just turned around and said no to 930 million. No, it's straight no. The board
straight up,
shareholders on Twitter and social media equally said no. And even those 25% in Canada went no. So all those people went no as well. So everyone went no.
I did a poll about it. It was 75-25, and the 25% I'm sure were the Riot shareholders just wanting a good deal. But you guys are exactly right talking about the Bitfarms floor. It really does validate the company, you guys, because if somebody's willing to buy every share you have for $2.30, there's really not a lot of reason in my mind, at least while that's an active offer, especially if they're entertaining other offers, that the share price should be trading much below that. And
one thing we didn't discuss about the impact of this is how significant is that gap of a CEO now in terms of Bitfarms is positioning as being able to defend themselves against Takeover. And actually, if you think about the timing, I was actually with Jeff Morphy, the CEO of Bitfarms, in London at the end of April, and this deal had been placed to Bitfarms before that date. This went to them on the 24th of April. So Jeff Morphy, though he couldn't say anything, was probably aware of what was going on, and you can see that he was acrimoniously told to leave straight away. He was sort of like on sort of like waiting for a new incumbent to arrive, but he was. I mean, as a CEO, albeit for a temporary period, he still have access to all the information. So we haven't spoke about what's the impact of that decision and this news story now that's come out now. Is there a case of actually there is more to it? And
I'm sure there is.
Is there some sort of a split is there some sort of a split in Bitfarms going on that we don't know? And maybe again, if you think, I was invited to the conference in Hong Kong to be a speaker with Bitcoin conference there. I didn't go because it was a long way to go, and obviously it's not just about time, it's about cost, it's about having the ability to do everything there. But two people that did go to that conference was Ben Gagnon, who's the chief mining officer, and Ben Yi, who's the chairman of Riot. So we're both
that's interesting timing, eh?
On the 9th of May, this is over 2 weeks after the offer was submitted. So what would the chances be in that conference that those two maybe actually have said hello to each other or cross paths or whatever, But it's both of them were out there for that Bitcoin conference. So
yeah,
this will be interesting. Obviously this is going to go on and on now, but the fact that Bitfarms have announced more players in the game will probably give Riot something to think about, and maybe we'll see some improved offers coming forward. But I can see it's good for Riot. At the moment, it's not great for the Bitcoin shareholders. They want to see more, and rightly so. They've got a business that was going to 21 exahash. If there are real other players in the market, we'll start hearing some of their bids as well, because there'll be a sense of these things come out. It won't be all behind closed doors. There'll be a bit of gamesmanship going on, saying we've got a bit of $1 billion or a bit of 1.1 billion, so you're gonna have to up the game. And
as they say, talk is cheap, Anthony. Put your money where if you got an alternate offer, let's see it.
Absolutely.
Yeah. Hey, and I just wanted to quickly mention this, Anthony, and we can wrap if you're good. TeraWulf, while we've been on this podcast, is up like 6 or 7% now. So a nice call out from David's wallet, talking about them outperforming. TeraWulf, Anthony, I got to tell you, that business is rock solid. They are generating a lot of free cash flow. The HODL, yeah, maybe we have a little bit of disagreement there, but I can live with that. And I think their access to the infrastructure, the energy, it's unrivaled.
I think, when you look at integration, they are fully vertically integrated. The fact that they, in Lake Mara, they own the energy. They've got a cheap energy contract at the Nautilus site, the nuclear site there, 2 cents a kilowatt hour. Yes, there are some potential, issues there if Amazon have bought the Talon partnership out there, and maybe looking to buy the whole site. That's a deal that TeraWulf can, they're in a position there where they can negotiate a deal and come away with a handsome figure. And they're building out Lake Mariner anyway, so it wasn't like.
That's a good problem to have. If Amazon
Nautilus is 50 megawatts, so what's that? 1.5, 2 exahash at the most. They could ship those to their other site there. Yes, it's a power cost. We want the power cost to be the cheapest possible. Nautilus was the cheapest going, but bear in mind, it's Paul's company who's got the power, so he's also the conduit there. The only thing they're not doing, which would make them absolutely fully integrated, is they're not making their own machines. And so Bitdeer, they're another one of these that have got nearly every component in the vertical line, except they don't own the power, but they have negotiated agreements with all their like Bhutan and with Norway there, and obviously in the state side there we've got some agreements there. But some of these mining companies are really really vertically integrated, and those two are definitely. And people harp on about the debt. The debt's at what it is at the moment, but it's from their position, it's manageable. I reckon the company got most of that debt anyway. I think insiders in the company have got debt in that company there, and if push came to shove, they'd probably convert it to shares and reduce the debt amount there if push came to shove. So I don't see that as a problem. the good problem to have is Nautilus, because at the end of the day, they either carry on or they grow to 100 megawatts, which is what they also agreed before AWS came in there and took the deal. Maybe there's a deal to be made there with AWS, and Paul's a businessman. He'll make the deal. So they're getting some. That's a nice growth today. So it's them and Core Scientifics on a burn again today. So all three elements of Core Scientific. So we've got the Core share, and then we've got the Core W warrant and the Core Z warrant. So the W warrant is the one that triggers at 693, and they have the warrant issued, I think, when the share price gets closer to $9. There's effectively all those that have got the warrants will have a share for the price of 1 cent. So it's literally you get an extra share when the company achieves that. And I think that's about 5 or 6 years to achieve that. Well, if you look at the race of that share price in the last week, it's probably next Thursday. So in terms of that, we grew the same distance we've grown the last week or so.
Oh, no.
We're going to be debt free in that company.
Oh man, Core Scientific is one ever since we started talking last year at 4 cents, Anthony. I'm like, oh, they were at 4 cents. I can't buy them at $1. I can't buy them at $2. I can't buy them at $3. Every single one, you guys. Core Scientific, I don't have any shares, unfortunately. I'm regretting it, and I probably should take a little more action on that one, but. Yeah, I know you do, Anthony. I'm aware you do. Hey, quick question on cores before we let you go, Anthony. Any idea what kind of machines they're running? We had a question in here from WS asking about their fleet.
Yeah, they've got a lot of S19s. In fact, there is a graphic. I think it's in the presentation pack, but it tells you the breakdown of the machines. They've got some S21s. So they are replacing some of the older machines with the S21s. They're not throwing the old machines out. They're keeping them warehoused. And post the halving, they actually repurposed some of those machines that were being held in storage, because with the growth in the hash price, they were able to return good profits by mining at lower underclocking the machine. So not running at the maximum level, underclocking the machines. Which means that you're paying effectively less energy, and getting some rewards that way. So they've got a mixture of machines, but effectively at the moment their efficiency is around 24-25 joules per terahash. So it's at the lower end in terms of number, but at the higher end in terms of really efficient mining fleets. And bear in mind, they've got the second biggest mining fleet after Marathon. And they're sort of like on a par with Marathon. There's not much between them. And if you think these big mining companies now will buy all the latest machines out there, these efficiency metrics, which are included on the website. So go onto the Power Mining Analyst website. There's a page for every miner. Look at the stats on there. Look at what the efficiency is. Look at what they mine Bitcoin. Look at what their operating metrics are. So you've even got the tables there with all the various comparisons. So have a look at those there. Let us know in the comments what you think of the website. We've just released a new website this week. So and it's on HTML. So when with the Wix website, it was taking 1.5 seconds to probably change the page. With the HTML, it's
a lot quicker.
So it's
for sure. Check it out.
We want your feedback, guys. So let us know what you think. What can we make? Actually, what can we do to make it better? What are you missing? We wanted to create something that you could go to one place, find everything you can about all the mining companies in one place, and that's what we're trying to do. And hopefully, we're getting towards that. We haven't stopped. So even though the website has been released this week on HTML, our team, and it's not just me and Bryce, there's people behind me and Bryce that are working, literally around the clock.
We have more staff than Griffin now.
We've got more. We've got a lot more staff than Griffin.
Yeah. No, it's a great platform. It's a great team. Anthony, I don't know if you want to get into this today. If not, we can do a podcast on it tomorrow. This would actually be a great podcast anyways. But we've had a couple questions. Robin brought it up here about Texas grid itself. And one thing, I don't know the grid stability and the grid redundancies in Texas personally, but one thing that has come to mind for me is with so many of these miners going into Texas, we know that that's a curtailing state. if all of these miners turn off at the same time, it like that has a big impact on global hash or difficulty, global hash rate, the amount of people that are competing for these blocks for all the other players in the world. Do you think there's risk in having so many miners condensed into one state, whether it's power grid risk, whether it's a natural disaster risk, political risk? Is there anything that we should be kind of flagging here, Anthony?
No. So Texas is the only state in the US which has effectively its own power. It doesn't. The rest of all the other states work under sort of like the national type grid, but Texas has its own grid. It's not perfect. We know that because there's not enough energy to cover all the businesses working and domestic demand around the clock. Hence, miners who get approval to go into Texas to mine Bitcoin sign up to these agreements to say they'll curtail when the domestic demand requires it. And so there are various schemes that they can join. And most of them do that, and it's to their benefit they do that. And Jason came on the podcast and he articulated it really well. He said, like, we'll never get 100% utilization in Texas because we're curtailing 2-3 times a day. He said, but what you'll find is by curtailing and us determining when we're going to go back onto the network like that, we can keep the price of energy really low. And in 2023, he quoted 2.2 cents a kilowatt hour. Now, that's great for the production that they did, but bear in mind their mining production was probably close to half of what people were expecting to produce in 2020. So there is a trade-off. Now, again, in Texas, and actually starting to appear in other states now, there is this thing where when the demand is high and the miners switch off, they've got the ability to sell energy back to the grid. So in Texas, we've seen that from the likes of Iron, from the likes of Cypher, from the likes of Argo, Bitdeer, massively from Riot Platforms, because when Riot do it, they put it on their updates every month. And we know in August last year, just in 1 month, they received $31 million in power sales and demand response credits. That was an enormous amount. I mean, there's no way if they had kept the machines running 48 hours a day that they got anywhere near that total. So, but that is 1 month in a really hot month where the price of power can escalate, upwards of say $1,000 a kilowatt hour or something like that for short periods. And so if you switch off and you're able to provide power back to the grid and other people are effectively, or other customers are paying that, then you get rewarded for being able to sell that power. So it doesn't happen. Bear in mind, I think it was 72 million for the whole year. 31 of it was in August. So take out the August, you're down to 41 million for the other 11 months. So, generally 2, 3, 4 million a month is a norm. In those 4 months between June and September, they are the warmest months, and that's where you get the potential benefits there. So there is a trade-off. But Jason's they're really happy with what they're doing there. I mean, when I say really happy, I mean, I'm assuming if they had that 4x of machines actually working to a maximum output, they'd be even happier. But he said that they were happy with what they'd done in 2023, and they managed to get the price of mining a Bitcoin down to ridiculously low numbers, far lower than we've seen from any of these other mining companies. So the other thing that you want to say about Texas is because of that issue there, it can't be a great state for HPC in terms of delivering the 5 nines. Now, when I say delivering the 5 nines, it's 99.99% of uptime. That's what you've got to agree to if you're going to provide a full HPC service for AI and other stuff like that. Now, what some of these other companies are doing is they're providing not a full service. You're getting a lesser service, maybe it's sort of like say 85% or something like that, and therefore the revenues you receive will be reflective of that, because if you can't provide the full service, you ain't going to get the full revenues.
Gotcha.
And so that's there. So I don't think Iron or any of the other miners in Texas who are doing, in fact, Iron aren't doing their HPC in Texas anyway, so it doesn't even affect them. They're doing theirs in British Columbia. So, but it'd be very hard for mining companies to start operating HPC in Texas when you've got that low expectation of having you can't have power all the time around.
It's a really good call out, Anthony.
The grid is aging, not just in Texas. The grid is aging in the US as a whole, and unless there is massive amounts of funding put in and invested, and it just probably just won't be in the US. This will happen around the world. It's it's great using energy, but people forget you've got to continue what they call life cycling these type of grids. You've got to keep investing to keep the thing running. And I think what's happening in America is there hasn't been as much investment in the power infrastructure as required, and all of a sudden it's starting to really creak now. And so it's not going to be great for Bitcoin miners for any industry. It doesn't matter about Bitcoin miners. So if there's more investment, I think Canada is probably in a slightly better position than the US. And if you think about it, certainly from the weather perspective as well, mining companies in Canada, if you look down the tables of who's doing well in the tables, it's predominantly the Canadian miners. If you look at, certainly from this year, we've seen SATO Technology in that top 3 or 4, DMG in the top 6, Hive are in there, Bitfarms are in there. These, predominantly Canadian, these are Canadian-based miners. So, some of the Texas
one of the benefits of being cold all the time, Anthony, is
so Marathon and Riot are never in the top never in the top half of the table, never mind the top 3. So and Cypher weren't operationally were never in that sort of top group when we did cover Cypher not too long ago.
Yeah. Hey, last one. I keep seeing good comments in here, Anthony. So let me know if you need to go. TeraWulf currently on the up. Now this is going to be the gossip, you guys. TeraWulf's up 6% today. Everyone else is down. What does that mean? Is there M&A going on? Is there offers being made? The other one we just saw, Anthony, and I think there's a good chance of this as well, from John saying CleanSpark could put an offer in on Bitfarms within the next 10 days in this tweet. I don't know about the 10 days, but I could definitely see an offer coming in fairly short order here.
May have already submitted an offer if Bitfarms Bitfarms had offers already. There's only 2 miners out there that would be doing that, and they put offers in plural, so it wasn't like we've had one offer. It's saying no offers. Now, if I was in Bitfarms' shoes, I'd be saying we've had hundreds of offers, we're not even looking at that offer from Riot. You could equally play the poker hand against Jason and say, look, you need to come in a bit more all in, and we'll start talking. But I think I can understand. I certainly understand what Riot are doing, because it makes sense for them to do that. If they can see that growth, giving them the valuation that they want to see, that CleanSpark and Marathon have been given, and it's all about hash rate, then buying a company like Bitfarms will get them there. They've got the expectation. It wouldn't surprise me if somebody sort of like was looking at Iron as well. They will surely be there. TeraWulf, again, they're in that sort of 8 to 10 exahash range. Trouble with them though, it's you've got to come across Paul. He's not going to scale up the company he's created, along with NASA. Plus, TeraWulf's different from everyone else. They own over 40% internally, so it won't take many shareholders to keep that company from saying no. If the directors don't want to do it, you've already got over 40% of the votes, and so then you're looking for a small. And if the directors are saying no, what do you think the shareholders are going to do? Because the Wolf Pack, they love Paul, and they love the team there. They've got a great team there at TeraWulf.
Well, and normally people are invested in a company because they like that company and management and strategy. Yeah. If people wanted to be part of Riot, they would have bought Riot, right? So
there will be interest now. I think with this happening now, there will be interest in some of these other miners. As I said before, I'd be looking at Hive Digital.
Yeah, it could be next on the chopping block.
Hive Digital are going to be 5.5 exahash, probably by the time they bring the next update out. So end of May, maybe the end of June at the latest, they'll be 5.5 exahash, 8 at the end of the year. And a valuation of literally, at the moment, their exahash at the moment is valued at about $19 per exahash. And Marathon is $199. So do the numbers. It's like it's picking up a basket and going to the food which was just been discounted because it's going to run out. It's got to be done by today, eaten by today. So they've knocked 90% off it. So I'm struggling. I've done a bit of work on Hive at the moment. I'm doing an article shortly on them, and I'm scratching my head at why the valuation is what it is. What is the market not seeing that I'm not seeing? Because operationally they're very good. They're growing. They were an Ethereum miner. They're still growing the HPC business. They haven't got the client that Bit Digital have. But who's to say they won't deliver? I think at the moment 10 to 20 million annualized revenue in HPC alone. 5 exahash, that delivers 5 exahash every month. It delivers what it should do. Every month they're in the top 2. So it delivers a Bitcoin every month. They're growing to 8 by the end of the year. People will say, yeah, but it's 8 and Iron are 30 and CleanSpark are 32 and Hive were bigger than these two companies 2 years ago. Yeah, okay. But what Hive haven't done is they haven't gone and sold out the company every share. But then again, was that strategy the right thing to do? Maybe the market said, you haven't had the right strategy in place to grow, and these other miners did, and look where they are. Hive to a certain extent have been left behind, but the valuation of, I think, as I say, if the price has gone down today, it's under $240 million to buy the company, and at the market price, you pick out a percentage premium, you're still well under 400 million or whatever, 400 to 500 million.
Gotcha. Yeah, we're getting more comments now by Dave talking about Wolf. Something going on with the Wolf Pack today, you guys. We're not here to spread rumors, but something is definitely something is exciting the Wolf there today. Now,
you got Wolf shares price?
Wolf is one of my top 3 positions. Yeah, I'm a big fan of Wolf. Again, I can come to my disagreements. We'll call each other a disagreement for the HODL. Myself and Paul, but I really like what they're doing at Wolf.
I think when you hear Dan on Tuesday talk about HODL strategies, he'll articulate it just as well as Paul did, and again you'll start thinking, yeah, it's got a valid point. It's very difficult. We said this before, when the price
I don't know.
It's great when the price is rising. When the price came down in 2022, how many people were buying Bitcoin miners were buying Bitcoin in 2022. So Bitfarms and Argo Blockchain bought Bitcoin in thinking this is going to be the best thing to do, and it proved it wasn't. So, who knows? It's great. This last 18 months we've seen a great run on Bitcoin price, and those that have hodled have had their balances there. But remember what I said: end of June, Bitcoin price needs to be 71,000 or above. Otherwise, it's we're having some unrealized losses.
Hey, now, quick firepower here. 3 questions from Isan Van. First question, what is Anthony's portfolio like? If you pay a couple bucks a month for Patreon, you can see the full thing there, buddy. We don't get into portfolio here. What is vertical integration? I'll answer this one. Then he asked a question about non-North American public miners, Anthony, so you can get that one ready. Vertical integration, buddy, basically it's just owning all the different layers of the business or supply chain. So if you think about mining, you have to actually go out and buy the rigs, right? So in the case of Bitdeer, they're creating their own rigs. Then you need to find somewhere to put them. Then you need to find energy. Then you need to find management. Then you need to find someone to handle all your transactions and shares. So vertical integration is just the more of those pieces of the pie you control within your own company, the more vertically integrated. You think of it as a stack, right? First you buy the miners, then you buy the energy, then you buy the data center, then you get the management. So when we talk about vertically integrated miners, like Bitdeer, TeraWulf comes to mind, CleanSpark owns all their own facilities. On the other end of the spectrum, and we're starting to not see it as much, is asset light, it's called. And basically that would be hosting or renting machines. The problem with that is less control. So Marathon was a big advocate of asset light, obviously less capital intense up front. You can put your money to use for machines rather than facilities. However, there's less control. Anthony, you brought up the analogy, when you rent a car, do you drive it the same as your own car? Absolutely not, right? Don't go gentle on a rental. You absolutely bag the rental. You give it back, you don't care about it. So that's in a nutshell, vertical integration and not. And then the final question from Isan, are there any non-American Canadian publicly traded miners? I believe Argo is one of them. Iren's
Iren's although it operates everything in North America, so does Argo. Iren is an Australian miner. in terms of where the company's based, and Argo based in London. So Argo on the two exchange, on the LSE exchange, London Stock Exchange, and also on the Nasdaq as well. So and there are other companies out there. So Northern Data is another company out there. They're I think they're Germany based. Is it Phoenix Mining? I think UAE, big company in the UAE. But again, so I think Phoenix are very much a lot of insider holdings in that company. I think that the actual share capital available to the public is less than 10%. It's in single digits in terms of percent. So just in that question come up there, Hive earnings. I think I'm going to say the 29th of June. And the reason it's late, the reason late for Hive, it's because this will be their full year. So when you do quarterly earnings, the quarterly earnings that have just gone was January to March. So if it's not your end of year, you can normally put out your quarterly earnings, that 3-month period, in about sort of 5 to 6 weeks. And that's what normally happens. The earnings started to come out in the beginning of May. So just literally 4 or 5 weeks after the end of March, and have gone through all the way till sort of like, towards the end of May, and all the earnings are out there. Hive, for some reason, have their end of year as March, which is more attuned to like the UK. So a lot of the companies in the UK have end of year as March 31st, and therefore it takes longer to go through the full audit because they're issuing their whole year position now. It's not just one quarter. They've got to make sure everything's in a row. And believe you me,
so the auditing would take longer.
The auditing and Hive and I think Riot and Marathon have also been in this boat here, where when you're doing your full year, you've got to try and submit as well. They've got a time period to get everything done by, so they'll be getting everything done to release those by the end of June. And then what will happen then is end of June is the end of for their first quarter. So by the end of July, they'll be announcing, literally a month later, they'll be announcing their first quarter position, because it doesn't take as long to do the quarter position than it does the end of the year. But the end of the year is normally like a 3 months period to do it. You get there's an extra time. End of quarter is normally 5-6 weeks. End of year, double that.
Yeah,
probably
and
12.
we get the monthly updates in this sector.
We get a monthly update, so we know even before Hive issue their numbers, we can pretty much do most of their revenue, and we know pretty much what their energy price is going to be. So we could very closely get to what their energy cost is going to be, and we know that the operating costs, which is your staffing cost, overheads, you could argue they're fairly fixed.
Yeah.
So there shouldn't be anything untoward when you look at Hive from a quarter, but this will be a full year. So whether they separate the last quarter out, or they just issue a full year, which is their remit, and normally when miners issue the full year, they issue a full year. It'll be 2024 compared to 2023, rather than quarter one compared to quarter one of the previous year.
I just wanted to call out, Anthony, we've actually got Hive booked in on Monday, June 8th. So right after that earnings announcement. So as of right now, you guys, Bitfarms, June 3rd with Ben. We've got Dan Roberts, so CEO of IREN, on Tuesday, the 4th. And then we've got Aiden and Frank, CEO and chairman.
After earnings? I thought earnings are at the end of June, are they? Or...
29th. That's the 8th of July. Sorry.
8th of July, right. Sorry,
July.
Yeah.
My apologies, Anthony. So in addition to that, you guys hit the like button. 2-hour live stream today. We covered a ton of ground. Thanks so much for coming. Hit the like button. Make sure you subscribe. Leave any comments we didn't get to in the section. We'll be doing the exact same thing next week. Same place, same time. And in addition to that, you guys, it would be greatly appreciated if you can go check out the website. Let us know if there's anything else you want to see on there. We're working on capturing the HPC AI alternate revenue streams. And the other favor you could do for us is, if you use Spotify or Apple Podcast or whatever, just go in and give us a 5-star rank on the podcast platform. Would be a big favor as well. Appreciate the support, you guys. Let us know if you have any questions. We'll be back tomorrow with the traditional podcast, and have a great rest of your day, especially if you're holding TeraWulf, because if you are, you've definitely made some money during this podcast. They just cracked 221. They're up 7% on the day, Anthony. So hopefully you guys, you came here for 2 hours, you made some money, you learned a couple things, and now you can go on with your day. We'll see you tomorrow. Thanks again, Anthony, and